Hello everyone, in today's session let us start with the topic Reserve Bank of India. Now in our previous session at the last part we saw that Reserve Bank of India was incorporated on April 1st, 1935 as shareholders bank. Means that time the bank they had shareholders, but majority of the shares were held by the central government. But after independence the Reserve Bank of India got nationalized on April 1st, 1949, and since then it has been performing as a bank of central government. Now let us see functions of Reserve Bank of India. Now the functions of Reserve Bank of India are divided into three parts. First part is primary function, then subsidiary function, and there are some forbidden functions. Now let us see primary functions of RBI. Now issuing currency notes means the Reserve Bank of India they have the power of issuing currency notes, but except for 1 rupee note, because 1 rupee note are issued by Ministry of Finance. Then Reserve Bank of India work as a bank of the government. Then it acts as banker of other commercial banks or different kind of banks. Then RBI they have power over controlling bank rate or rate of interest, means they fix how much amount of interest they will the banks they will take on loan, or how much amount of interest they are going to give on different types of accounts. Then they handle exchange rate as well. Now these five are the primary functions of RBI. Then subsidiary, or you can say secondary functions of RBI are dealing in foreign exchange, then discounting bills of different banks, means checks or any other bills, then dealing in government securities, means RBI they have power of buying or selling shares of government, then accepting deposits without interest. Now RBI they can accept deposit, but on those deposits they cannot provide any interest. Then managing clearing houses, then managing agricultural credit, means how much amount of credit agricultural sector must get. Then extending short-term loans to banks, means whenever bank needs to take loan from a loan, then they can take from RBI. Now RBI they only provide short-term loans and to other financial institutions as well. Then regulating developmental, industrial and commercial activities in India. Now in another sense it means that RBI works for the development of the country. Now there are some forbidden functions of RBI as well, means it cannot grant loans and credit facilities directly to customers. They can provide loans or credit facilities but to other financial institutions, banks or government, but they cannot give loans or credit facilities to general public like you and me. Then next is it cannot allow interest on deposits. It cannot give interest on deposits. Usually when we deposit amount in our bank account, what we get is annually or semi-annually we get interest. But if RBI takes deposit, then they will not provide you any interest, means they will not provide any interest on the deposits given by any bank or financial institution. Then it cannot subscribe for any shares of any company. Now we have seen some companies they used to purchase shares of a company or other companies, but RBI they cannot purchase shares of any company. It cannot grant loans on the security of movable property. Suppose if any financial institution they want to take loan by giving any mortgage, any movable property as mortgage, then RBI cannot do that. They cannot provide any loan on the security of any movable property. Then it cannot work in the field of industry and trade. Even though RBI they work for developing developmental works and industrial work, but they cannot work, means they cannot perform as a normal bank to the industries. Then the last type of bank is cooperative banks. These banks are formed on cooperative basis. Now in our previous chapter we saw that cooperative societies are nothing but some people with common interest, they come together, they contribute small amount of capital and they form a group. Likewise in cooperative banks also it is nothing but these are formed on cooperative basis to meet the financial requirements of its members. Like those members who create this kind of bank, these banks only things about fulfilling their requirements. The rate of interest is very low. The idea behind formation of these banks is to provide financial assistance to the weaker sections of the society. Means these banks are formed by the weaker sections of the society, as well as their interest is also very low. That is why government, they make funds available to this kind of banks at very lower rate, or we can say concessional rates. Now let us discuss in detail about commercial banks. Commercial bank is nothing but a financial institution which deals in money and credit. Money, we know, cash, and credit means something for which in business term you can say like credit is another term for loan. It accepts deposit from those who have surplus, like those who want to save money. Commercial banks, they take savings from them, deposits from them, and they lend to those who need it. Those who want to take loan, they can go to commercial bank and they can take loan of whatever amount they want. The difference between the rate of interest on deposits and loan is the profit of the bank. Suppose when I go to deposit my money in any commercial bank, then in that deposit of money, the bank will provide me around 2 to 3% of interest. But when the bank, they give that deposit to any other people on loan, they will take 7 or 7.5% of interest from that person. So the difference between this 2 to 3 percentage to and 7 or 7.5 percentage is nothing but the profit of bank. Now let us see the definition of bank. According to Indian Banking Companies Act 1949, a bank is an institution accepting for the purpose of lending. Means their main function is, or their main agenda is to take deposits for lending purpose. They will not keep it with themselves. They are going to lend it to someone, or investment in deposit money from public, repayable. Now the amount that you are going to deposit in any bank, it is repayable. Means until unless you don't demand from the bank, they will not give you. But if you make demand, means you want to take back your deposit, then you can make demand. They will obviously give you, repay you back your amount. Or you can withdraw, you can demand that money through check, draft, order, or there will be other methods of demanding as well. Now there are some definitions given by R.S. Mayer, Justice Holmes, then you can go through those meanings, but overall meaning is same, that a commercial bank is nothing but it is an institution which accepts deposit for the purpose of lending or investment in the deposit money from public, which is repayable on the demand through check, draft, order, or any other source. Now let us see what is the term bank means. Bank is a German word which means to collect, because they take deposits from the general public. The main function of the bank is collection of funds as deposits. Now remember, collection of funds by a bank is known as deposit, and later on banks started performing other functions such as lending, etc. Now agency functions are nothing but those other functions that bank performs these days. Bank has occupied very important place in the economic structure of the company. After independence, in order to achieve social objectives of the company, bank were nationalized. Earlier bank, they were private banks, and their main motive was to earn profit as well, profit only. But because the economy of the country was declining, the government, what they did was that they nationalized some banks to bring social development. According to 20-point program of the government, banks have been entrusted the responsibility for developing the undeveloped regions of the country. Earlier bank, they used to focus on those areas where there were cities, big cities and states, but after nationalization, bank were given responsibility to start working in undeveloped regions as well. In the light of this recent thinking, banks may be defined as the financial institution dealing in money and credit to achieve the economic as well as social objectives of the business. Earlier it was only economic objective, to achieve economic objectives of the country, but these days social objectives are also included. Now let us see different types of commercial banks. Now first is public sector banks. Banks having major government stake are public sector banks, means those banks in which government participation is more than it is known as public sector banks. These banks are required to meet the social objectives. Now these banks motive get is not to achieve economic objective, but their main motive is to achieve social objectives as well. Then nationalization. Since nationalization of 14 major banks in 1969, remember that sometimes they used to ask for 1 mark question, when was the banks of India nationalized? Now 14 major, that was the first time banks were nationalized in 1969 and have been dominating Indian banking since then. Those public sector banks, they are dominating Indian banking system. Then next is private sector bank. These banks are owned, managed and controlled by private promoters, means government has nothing, they don't control this kind of banks. Due to unhealthy financial health of the public sector banks, private sector banks were allowed to operate purely on banking line and compete with foreign banks, because the condition of public sector banks were declining day by day, and that is the reason these private sector banks were introduced, and since then they are given responsibility for competing with the foreign banks. Now the major private sector banks are IDBI, ICICI, HDFC, etc., or you can say Axis Bank as well. Now let us see foreign banks. These banks are owned, managed, controlled by foreign promoters. Now private sector banks, they are controlled and managed or owned by the private promoters of Indian nationalization. Those who are Indian, they can own, manage and control those private sector banks, but foreign banks, they are owned, managed and controlled by foreign promoters. After the policy of liberalization, means other foreign companies, they were allowed to trade in India as well. That was known as liberalization. Foreign banks like Citibank, Bank of America, Chartered Bank, Standard Chartered Bank, American Express and Hong Kong Bank have been flourishing in the vast Indian financial market. Now let us see some functions or services of commercial bank. Now first and foremost important function is accepting deposit. This is one of the primary function of the bank. The main purpose of bank is to promote savings and accept deposits from the customers. Because of this bank, we had developed the habit of saving. Banks offer facilities in different ways to suit the needs, tastes and preference of the customers. Deposits are accepted mainly in current, savings, fixed deposits, home save and recurring deposits account. Now these are the different types of account that we can have in any commercial bank. These things also we will be discussing in detail in this chapter. Now when we talk about functions of commercial bank, it is divided into 4 main parts. First one is accepting deposits, then second is advancing loans, then third is agency functions or services, and there are other services as well. Now when we talk about accepting deposits, they can accept deposit through current account, saving account, FD, home save account, then recurring deposit account. While advancing loan, they can advance loan through cash credit, bank overdraft, bank discounting bills. Then agency services are nothing but collection of checks, bills and drafts, then collection of interest, dividends, etc., payment of interest, installment of loans, insurance premium, etc., then purchase or sale of securities, then transfer of funds. Then other services, they have issuing travelers check, issue letters of credit, locker services, underwriting of securities, and there are lots of other services as well. Now we will discuss in detail. Now let us see point number 2, advancing loans. Now this is also the primary function of the bank. The bank advances loans at higher rate of interest than what it allows on deposits. Means they will give less amount of interest on deposits and they will charge higher rates of interest on providing loan. And the difference between these two rates is nothing but profit of the bank. They advance loan through cash credit, bank overdraft, and discounting of bills. Now let us see what is meant by cash credit. Now in this method, the bank, instead of making payment to the borrower in cash, deposits the money in the current account opened in the name of the borrower. Suppose, let me take an example, that if I go to a bank for taking loan, then they will not give me cash at my hand. What they will do is that they will open one current account in my name and they will deposit that loan amount into my current account, and whenever I need, however amount of money I need, I can withdraw from that current account. The borrower can withdraw the money by using checks up to specified limit. They will put up some limit up till which I can withdraw money through checks. The bank asks the borrower to submit a promissory note. Promissory note is nothing but a promise note from the borrower that I have taken loan from this bank. Okay, the borrower may also be required to furnish security for the loan. If I want to take loan, then I have to keep something in as a mortgage to the bank for security. Generally, loans are granted on the securities of goods. Interest is charged on the actual amount withdrawn. Now suppose if I have taken loan of rupees 3 lakh and they have deposited that 3 lakh in my current account. Now if I had withdrawn 2 lakh from that account, then that means I have actually withdrawn 2 lakh rupees, and they will calculate interest on that 2 lakh rupees or 50% of the loan sanctioned. Okay, now after calculating interest on that withdrawn amount or the 50% of the loan sanction, whichever will be higher, they will charge interest on that money. Suppose if, let me take example that I had withdrawn 2 lakh rupees and interest on that 2 lakh rupees is 30,000 and 50% of the loan sanction will be 1,50,000. Then if they calculate interest on that 1,50,000, if the rate of interest is 20,000, then obviously 30,000 is higher than 20,000, so they are going to charge interest of rupees 30,000, not 20,000. Now next is bank overdraft. As if you remember, in one of my previous session I have explained what is meant by overdraft. Now this facility is granted by the bank to its current account holders. Means they will not provide this kind of facility to any other type of account holders but to current account holders. Under this arrangement, the customer is authorized to withdraw more than the amount deposited. Suppose if you have 5,000 of amount in your current account, then through this bank overdraft facility you can either withdraw more than 5,000. The amount of overdraft is negotiated between the bank and the customer. Means bank and customer, they will negotiate on how much amount of overdraft the customer can withdraw, and after that the bank will allow. This facility is granted without security, means they will not charge any security for overdraft. Interest is charged by bank on the amount withdrawn on monthly basis. In practice, the customer pledges security of stock of goods. Now next is discounting of the bills. Financial assistance can also be sought from bank by discounting bills of exchange before the due date. Now bill of exchange is nothing but, suppose if you are running a business and you have sold any goods on credit, then your customer, what they will do is that they will draw a bill and they will give it to you. That is known as bill of exchange. Means they will fix a date that your customer, suppose this date, on that date I will pay you the amount for which I have purchased goods from you. Now that bill of exchange, if the maturity date of that bill is after 3 months and if you need money right now, then what you will do is that you will take that bill of exchange, you can go to any commercial bank and you can discount it. Means you will submit that bill of exchange to the bank, and bank in return, after deducting some discount money, they will give you the remaining money. And on maturity date, what the bank will do is that they will charge that amount of money mentioned in the bill of exchange to your customer, and the bank, they will take money from the customer directly. Okay, so now this is meant by discounting of the bills of exchange. Now don't forget about this bill of exchange, because in accountancy as well we will be discussing a particular chapter about this. So that time we will discuss in detail about the bill of exchange, but as of now you just try to remember is that discounting of bill is also one of the function of bank. Then third type of function is agency function or services. Now commercial banks, they perform other agency functions as well. Now first one is collection of checks, bills and drafts. The customer deposits his check received from outside parties, bills accepted by other parties and bank drafts received from outside. If you have received any check, bill or draft from any other third parties, then the bank collects the amount of these documents and credits the money into customer's account. Means you can just give those checks, bills and drafts to the bank, and bank on your behalf, they will collect the amount from your customer. Then collection of interest and dividends, etc. Suppose if you have invested some money in debentures or shares of any other country, any other company, what the bank will do is that if you direct your bank to receive or to collect interest or dividend on your behalf, then the bank will do that automatically every year or every now and then whenever the time comes. The bank will not disturb you that you have to do this function. Instead, the bank will do the collection of those interest and dividend on your behalf. Then third is payment of interest, installment of loan and insurance payment. Suppose if you have any interest to make payment for, then installment if you have taken any loan, and per month you have to pay EMI, or if you have any insurance premium to pay, then you can just simply direct your bank to pay those interest, installment or insurance premium. Then what they will do is that they will deduct that required amount of money from your account in the bank. You don't have to pay manually, you have to just instruct your bank to make the payment on your behalf. Then next is purchase or sale of securities. Sometimes the bank, they work as your agent, and what they do is that they can purchase or sell your shares or debentures or bonds or any other government securities on your behalf. Then transfer of funds through drafts, mail transfer, etc. Banks provide facilities to transfer funds. Nowadays you can just transfer your fund through drafts or mail transfers, but for these agency functions, what they do is that they used to charge very minimum charges. Then other services are also there. Now first is issuing traveler's check. Now what is traveler check? Now traveler check, suppose if you want to go for any vacation and if you don't want to carry a huge sum of money, a large amount of money, then what you will do is that you will go to bank, you will instruct them to issue traveler's check for the desired amount. Means how much amount of money you want traveler's check for, you can just ask them. Now then they will provide you the traveler's check, and through that check you can withdraw any amount of money from any place. Only the thing is that suppose if you had one traveler check of rupees 2 lakh, then if at one point you have withdrawn 10,000 rupees, then they will write that 10,000 at the back of your check, and a remaining 1,90,000 you can withdraw anytime you want. The total amount withdrawn cannot exceed the amount of the check. Suppose if you are carrying 2 lakh rupees traveler's check, then you cannot withdraw more than that. Traveler's check ensures safe journey without risk. Then next is issuing letter of credit. The bank issues letter of credit on demand to its customer. Sometimes suppliers of goods and lenders of money insist upon letter of credit issued by the bank. Suppose if you are purchasing goods from any supplier, or if you had taken any loan from any third party, then what you will do is that you can ask your bank in which you are having account for issuing a letter of credit. This can act as a guarantee. Okay, means if you are not able to repay back that amount of money, then surely the third party from whom you have taken loan or from whom you have purchased goods on credit, they can just simply go to your bank and they can inquire about your account. Then next is locker or custodial services. There is always great risk in keeping large amount of cash, jewelry and other valuables. The bank offers an opportunity in the form of lockers in the premises of the bank itself, where valuables can be kept on payment of nominal charges. Means they will provide locker for you to keep your cash, jewelry and other important or valuable things. There are 2 or 3 keys of the locker, so for opening and closing it, both the keys, one kept by the bank. Means that for that locker, if there is 2 key, then one will be kept by the bank and other will be with you. Then for opening, both the keys are required. The locker is operated by the customer as and when required. Means whenever you want to go and open that locker, you can just go to the bank and you can ask them. Charges of availing of the services of small size locker in the size 6 inch by 6 inch into 48 inches, 300 per year. Now this rate may be revised over some years. Okay, so just you have to remember that the bank, they provide locker or custodial services as well. Now for charging these nominal charges, it can differ from bank to bank and from place to place and from time to time. Then next is underwriting of securities. Underwriting means, suppose if a company wants to issue 2000 shares, but they had received application of only 1000 shares, then the remaining 1000 shares will be subscribed by the bank which had become the underwriter of that particular bank. Underwriting means undertaking the risk to subscribe for shares and debentures of companies in case applications from public fall short. Banks also underwrite shares and debentures of companies. In this way, banks help in building and strengthening capital market. The next is dealing in foreign exchange. Foreign currency is required for import, export, foreign travel and all sorts of foreign dealings. We can get foreign exchange through banks. Means if you want to convert your money for dealing with any outside means any other country's business or something, then you can go to bank and you can convert your currency. Then providing references. Sometimes creditors and money lenders require from the customers trade references, preferably from banks. Means if a bank can work as your guarantor, then some people they feel safe to lend you money, or sometimes the customer also they want to take a reference from any bank regarding your character, your business's character. Okay, so that time bank helps in providing references. Then next is issuing bank drafts. Bank drafts are the most economical and safest means of sending money. It is an instruction to the bank to its branch to pay the certain specified amount to the particular party. Means if you fill up a draft form, then it is kind of an order from your side to the bank to pay a particular third party the specified amount in that draft. Okay, these bank drafts can be obtained against bank account and can also be obtained by cash payment. Means either you can direct the bank to make the payment from your bank account, or you can submit that draft form along with cash money to make the payment. Then in case of local payments, means within the same city, then pay order is issued. At that time bank drafts is not required, pay order is issued. Then advisory function. Bank also function as friend, philosopher and guide for his customer. Bank renders advisory services on economic matters to his customer. If you have account with any commercial bank, then they can help you in economic matters. They will give you proper or helpful advices. The next is creator of money. Now creator of money, what is meant by that? That banks create money by extending loans. Creating money doesn't mean that they can print any amount of money. No, it is not like that. Now let us read one example. The bank grants loan of 80 against a deposit of 100. if the amount of loan is deposited or retained in the bank will grant a loan of 64 against this deposit of 84. Now let us understand this example carefully. Suppose you have an account, and in that account you have 100 rupees, and based on that you are taking loan of rupees 80. Now if the amount of loan is deposited or retained in the bank, now if this rupees 80, instead of giving this 80 rupees to you, if the bank keep it with themselves, then what they will do is that through this 80 rupees they can give more loan. Okay, they can grant a loan of rupees 64 against this deposit of 80. This loan can still be granted against 64 and so on. It shows that the original deposit of 100 has increased to 100 plus 80 plus 64 is equal to 244. Now see, from this 100 rupees of loan they have created extra 144. Okay, now this is known as creator of money. Okay, so you go through the functions of banks, commercial bank again, and if you have any doubts then you can ask me. Okay, and in our next session we will discuss about different types of account opened in the bank. For this session we will wind up here. Thank you.